have to be the extreme, but the extreme is the safest. Number 4, identify resting liquidity around the point of interest. Now this comes in the form of many retail patterns such as double tops and double bottoms, trend lines, etc., flags, head and shoulders, things like that. So those are the common retail patterns where most retail traders are placing their stop losses around. So that is an area of liquidity that the market will most likely purge. So if we're aware of that, then it works in our favor. Okay, so again, we'll go over this in the trading examples. Now, number 5, the final step here, do not over refine the point of interest, right? The goal is to find a winning trade, not to have the tightest stop loss possible. All right, trading isn't about ego. I know sometimes if you go onto Instagram or YouTube, you see traders bragging about 1 pip stop loss. Losses, 1 to 100 trades because of their 1 pip stop loss. Like, it's completely unnecessary. We're not doing this for ego. We're doing this to be profitable, to make money. That's why we're all here, right? That's the whole point of trading. So do not over refine the POI down to like a 15-second POI where you can achieve a 0.6 stop loss. It's completely unnecessary. So these are the 5 steps that I've written here on my chart. And now that we've gone over those basic steps, what I'm going to do is, this is an anchor text, so I'm just going to move it up to the top left corner of my chart, and it will stay there as we move around and look at the chart examples, so we can always go back to these steps. All right, so now that that's over with, let's dive into some chart examples. All right, so to start our chart examples today, we're going to be looking at the Australian dollar versus US dollar, and we're currently on the 15-minute time frame. Now before me, I have an example of clear bullish order flow, so we're of course looking for buys. Now in recent price action, we can see that we have a solidified high right here, a solidified low right here, and then clearly price has broken that structure. So step number 1, of course, locate the break of structure. So let's map that out. First of all, we have a minor break of structure here. It's important to note, but the actual break of structure is right here. So let me just map that onto the chart. All right, so the next step here, before we go any further with the breaks of structure, the next step on the list is to gauge premium versus discount pricing. Now in previous lessons, I've told you could either use the Ganbox tool or the Fibonacci tool. For the purpose of this video, let's just use the Fibonacci tool. So I'm going to drag from here to here. Now you might be wondering why I did that, because I said this was the solidified low. This was consolidation here. This was the actual bullish leg. So although this is our recent higher low, right, this is a new low, but it's not necessarily a higher low because this didn't break any structure. So we've dragged the Fibonacci tool. We can clearly see, buy below 50%, sell above 50%, right? We're only looking for buys here. So right off the bat, we can eliminate anything that was within this area. Now let me briefly explain why that's so important, okay? Let me delete this for a second. A lot of people might have looked at this chart example and said, well, this right here is a great point of interest to trade from, okay? Because you've watched the other videos on imbalance, and you recognize that there's significant imbalance here that was created by this impulsive bullish candle. So you may be thinking this point of interest right here is the best, most recent one to trade from. However, again, just by using this simple concept, of premium versus discount pricing, we can clearly see that that is a very low probability area to be trading from because it's above the 50% mark of our Fibonacci tool here. So that would mean that we'd be buying in premium pricing, which we of course don't want to do. We want to buy low and sell high, right? We've all heard that phrase before. So in order to do that, we disregard everything up here and we only focus on everything down here. So with that being said, what do we have down here? Well, there was a minor break of structure and then eventually a full break of structure, right? We've already eliminated this point of interest and everything within here is pretty efficient pricing, okay? You can see that they're very small, low volume candles. All the wicks are meeting. We don't have any imbalance or inefficiency within this area of price action. So we can kind of disregard that as well. There's no clear area to enter from. Of course, on lower time frames, there would be more of a story to be told within the wicks. But like I said, overall, this is very efficient pricing. So we're just going to ignore that. Now in this video, I'm not going over multi-time frame analysis. I'm not dropping to the 1 minute or the 3 minute or anything like that. This video is just on choosing the best points of interest, which can be done on any time frame for any style of trader, okay? So with that being said, with this being all efficient pricing and not having a clear point of interest, that only leaves one area down here, okay? So this would be the extreme actually. When I wrote locate the point of origin for the break of structure, the extreme or the zone that created impulsive imbalance. So technically, this zone here created impulsive imbalance, but we already eliminated that zone due to the premium versus discount pricing model. Okay, so now we can target the extreme, which is way down here. This is the last point in price before our trade idea would be invalidated, right? Because if price were to break through that low, then that would change market structure. We would no longer be looking for a buy position, we would be looking for a sell position. So this point is our extreme, and it also created impulsive imbalance. We have imbalance right here, okay? So we can clearly see momentum kicked in from that point. Now, let me delete the premium versus discount pricing, the Fibonacci. There's two ways to look at this point of interest, right? If you want to be safer and more general about it, you can target the bearish candle, right? You can target that whole thing right there. That to me is a little too large. If we measure how much our stop loss would have to be, it would be around 10 pips. It's acceptable, but doesn't really fit within my parameters. So what I would do is refine it down to this candle, this low volume candle. I would still place my stop loss below this wick, but being able to enter from here would make a huge difference. Now, another thing you can do if you're not good at refining the stop loss, or sorry, refining your POI like that, you could still, sorry, let me delete this. You could still target that bearish candle, but enter off the 50%. And that kind of achieves the same thing overall. So if you're having a hard time refining your point of interest, simply keep it general by targeting the last down candle before the up move, which is the order block. But use your Fibonacci tool or the Ganbox tool to find the 50% and enter off that, because then from 10 pips as a stop loss, you could now achieve about 6 pips, which is very healthy. I'd be comfortable with that. Okay, so, but for the purpose of this example, I'm going to do what I would do, which is target this candle right here. Let's just drag that out, and I'm going to label it 15 minute just so everything stays nice and clean. We know what time frame we located this point of interest on. So we've taken care of step 1, 2, and 3. Now step 4, identify resting liquidity around the point of interest. So we actually do have quite a bit of resting liquidity around the point of interest, and it may not be visible right away, but it's actually in the form of trend line liquidity right here. If we were to drop to the 5-minute time frame, for example, this would be much more easily identifiable. We have this right here. It is not equal lows, a double bottom, but it is relative equal lows. So we can label that. Go back to the 15-minute time frame. So this adds more validity to us targeting this point of interest, right? Because we know there's resting liquidity here, and price is most likely to purge that before triggering our point of interest and then hopefully taking off in our favor, okay? Now step number 5, of course, do not over refine the POI. I did not. We're on the 15-minute time frame, so this is certainly not over refined. It's basically just 50% of this bearish order block here. I just simply refined it to this candle, but it's not over refined. Over refining would be going to the 1-minute time frame or the 30-second or 15-second time frame and really getting the point of interest refined down to like 1 pip or half a pip as a stop loss. And that is a bit excessive in my opinion. So we've already covered that, all right? So now that we've gone through all 5 steps of choosing the best POI, let's play price forward and see what we can see here. Okay, that went pretty quick. As you can see, we did not trigger the point of interest just yet. Let me place a position tool here though, because I didn't do that yet. So what can we get away with here? We can get away with a 6 pip stop loss, and we're simply going to target the most recent structural swing high. That would give us 7.7. Seven as a risk to reward. Okay, so 6 pip stop loss, 46.6 pip take profit. Now, like I said, this was not triggered. We came down significantly. Hey everyone, hope you're all doing well. In today's lesson, we're going to go over some tips for backtesting. Okay, so backtesting is a very common topic in the trading community. The problem is most people do it completely wrong, and they give up on backtesting and don't actually receive the full benefits of it because they lack direction. So the main point I want to go over here is that when backtesting, it's crucial to have proper direction. And the 3 tips I have set out here are going to help with that, okay? So the very first tip we have here, you might be noticing what these colored boxes are on my chart. Some of you may have seen it before, some it may be completely new to you. So use the Asian Session Range Indicator is my first tip. So let me show you how to find that. You just type it, it's called FXN Asian Session Range. It's completely free. If you just type in Asian Session Range, you'll find it come up here. I just have the favorite on it just so it's always in my favorites list, right? So that's the very first tip. Now, why is this important? Well, it ties into tip number 2. You should only test your regular trading session. And of course, the regular hours that you are typically awake. So in this case, blue represents Asian session, okay? The yellow zone represents London session. And the zone that hasn't appeared yet because I'm in replay mode is the New York session, which is green. You can see the previous New York session back here, but we'll go over that in a minute. So keep in mind you can edit all of these. There's a bunch of settings within the indicator. You can edit to whatever colors you prefer. These are just the ones that I've chosen. You can customize it to your liking, okay? But this is extremely important because the main problem people have with backtesting is that they just open up the charts and just start testing their strategy on any potential setup that they possibly see. That's completely wrong because it will give you unrealistic results and maybe just confusing and deter you from continuing your backtesting sessions because the results won't add up, right? It won't make much sense and you're going to be frustrated. So I don't trade Asian session. I mean, most people don't, but you know, I certainly do not. And I live in a place where we go by Eastern Standard Time. So London session is typically when I'm sleeping, all right? I go by the same time as New York, Eastern Standard Time. So I'm typically waking up at between 5 and 6 a.m. I've been trying to wake up at 5 a.m. lately. So that would be about right here. However, after going through my morning routine, I don't get to the charts until about 6 a.m., which would be about here, okay? Right where the vertical line is at 6 a.m. So yes, it's still part of London session, but London session is coming to an end and we're just going to be heading into New York session. So I know that that's my preferred time to trade. I'm just going to put a vertical line here at 6 o'clock in the morning because that's typically when I would be getting to my trading desk and analyzing the charts to see what opportunities lay ahead for me in the trading day. So at this point in time, we can even bring back the candles to here too, just to keep this as accurate as possible, okay? So I'd get to my trading desk and this is exactly what I would see. I see the Asian session range. I see that price broke out to the upside of that range, clearing any top topside liquidity from the range. And then we started ranging again during London session. What comes next is to be decided. However, because we had a clear breakout of the Asian session, we can mark a break of structure, right? Because now we're just going to be executing our strategy, okay? That's all backtesting is executing your strategy and testing its validity. So we have a break of structure to the upside. Getting into London session, as I said, we're ranging. Now, what was responsible for this break of structure? Well, there is quite a bit of bullish momentum here, but we still had some indecision before the break. The true impulsive break was right here where the imbalance lies, okay? So we could target this candle here, a very low volume candle prior to the break. However, just to be safe, I feel it would be best to include this candle instead, because the wick travels much further down, and if we have our stop loss placed below that zone, it would be a lot safer than just targeting this very small candle here. That's too refined for me. I'd rather go after this candle. So let's drag that over. You know what? Let's use the Gann box instead of the rectangle tool. I just ignored what I said. Right, I'm targeting this candle here. Okay, so targeting that candle. Let's check what kind of pip range that is. From top to bottom, it's 4 pips. Your stop loss would have to be below that, so you'd probably be looking at 5 pips. I don't really like that, so let's go from the 50% instead. Right, the equilibrium of that candle, 50%. Stop loss just below. Can we get 3 pips? Yes, we can. So 3 pips is my preferred stop loss size. I try and always aim for that if possible. I'm flexible, but that's what I aim for. So again, just to clarify, I put this vertical line here because this is when I would be getting to my charts, right? At about 6 in the morning, after I'm done with my morning routine and I'm ready for the trading day. Okay, so we've identified a break of structure that happened just after the Asian session range here. Broke out to the upside, so that's a clear break of structure. What happens when we locate a break of structure? We locate its point of origin. I've determined that that is this candle right here. So all I'm doing is executing the strategy that's been taught in the course and the ebook, right? This is the exact strategy I use. So I'm looking for price to make its way back down to this point of interest, trigger this 50% equilibrium entry, and then head back up to the upside from there, okay? So very simple. This is just a typical backtesting session. Now, in terms of target profit, there's not enough information here just yet, but for now, I would set the TP of the risk-reward ratio tool here at 34 pips, because I would be at least targeting just the high of the London session so far. Mind you, London session is not complete yet, so we have to play price forward and see if anything develops. So there's of course a big range between where price is currently at. A big range between where price is currently at and where I would like to see it end up, right? We've got just under 30 pips of a range, so there's a lot that can happen within that time. This is just a preliminary prediction of what may happen, and I'm staying prepared for it, but we have to play price forward to see how things would develop this morning, okay? So still respecting that high there, forming equal highs. Okay, so this is interesting. We have this break of structure to the downside. So instead of, because this is such an impulsive movement to the downside, instead of targeting the London session high, what I would instead like to do is find the supply that was responsible for this break to the downside, which I would identify as this bearish indecisional low momentum candle right there. Let's drag that over. Okay, so then in this case, it makes more sense to, instead of targeting the London session high, target the very bottom of that supply zone, okay? So that would be 26 pips, 3 pips stop loss, which would, let's just adjust this a little bit. Yep, that's about right. So about 8.87 R. Okay, so very healthy position. As you can see, price is already tapped into the top of our point of interest, but I have an order set here for the equilibrium. So let's see if that gets triggered. Okay, move this over. Keep in mind, we're just back testing the typical strategy that's taught within the community, okay? The video course and the ebook. This is just the typical strategy, and the only thing I just want to outline is that we're only testing within our regular trading session. So for me, that's end of London to the open of New York. For you, it may be different. If you're located in the UK or somewhere in the world that that London session is preferable for you, then you need to be testing this session, okay? But this is testing for my session because I go by Eastern Standard Time. So these are my ideal trading hours. This is the only possible way to get accurate backtesting results and see if your strategy is truly valid, okay? If you need to make tweaks, you can make tweaks, but this is the only way to fully know accurate data, okay? By trading the hours that you would normally trade. So I put this line here because this is when I would wake up and get to the charts. And from that point on, this is what I would be seeing and this is what I would be thinking and executing on, okay? So let's play price forward and see how this goes. Okay, so that was a very quick results. And as you can see, this green zone is starting to form. That indicates New York session. Again, you can customize these colors to whatever you want, but I would strongly recommend using this indicator, the Asian session range, because it means you don't have to look at these, the silly time box at the bottom here, because it's more visual this way if you just use the indicator. So it's a very helpful tool. And as you can see, this triggered beautifully, very low drawdown, maybe about 50% of the stop loss size was utilized for drawdown, and then price quickly exploded to the upside. Mind you, we're on the 5-minute time frame on GBP USD. If we drop to the 1-minute time frame, I'm sure there'd be more detail to go over, but just for the purpose of this video, we're just going to stick to this time frame, plain and simple. So yeah, went straight to take profit for 8.87R. And now tip number 3, of course, would be log the testing results in your trading journal. This is extremely important, guys. Whether it's a physical journal on your trading desk that you you physically by hand write down your trades and all the results from it and your emotions when taking it, etc., etc. Or if it's an online journal such as Apple's Notes or Notion, it's a really popular one. There's a few others as well. All kinds of different things you can use, but it's very important to log the results, because then you can look back on it after a full session and start to tweak things, start to see like where you went wrong, how you could have improved, if you missed opportunities that could have easily been capitalized on, what you could do to prevent that in the future, all kinds of things like that, okay? So these are some pretty straightforward tips that I just wanted to share with you guys. Of course, we're using the replay tool on TradingView. I believe that requires a premium membership to TradingView, but it's well worth it. It's a very small price to pay for consistency. So I didn't go over the absolute basics of backtesting because most of you know how to utilize the replay tool. It's very basic. This is more for tips on how to efficiently optimize your backtesting results, okay? So just to clarify, use the Asian session range indicator. Only test your regular trading session and the typical hours you would be awake and at your desk ready to trade. And then of course, number 3, log testing results in your trading journal, okay? So I hope you guys enjoyed this video, and the next video is going to actually be on your trading journal, okay? I have a template on Notion that I would like to share with you. with you all, so stay tuned for that. And we're going to go over journaling techniques and tips for that. So I'll talk to you guys soon.
I just want to show you a quick little thing I've been back testing since I've been using the strategy. Well, not so much the strategy, but the indicator. This could be something that you guys could try back testing or potentially practice if you guys like scalping more. So with something like this, I haven't really played through price yet, so I'm just gonna kind of wing this and see what it looks like, just to keep it open and honest with you. So this is 4 a.m. Eastern Standard Time. This would be London session as of right now, because London UTC hasn't actually done their daylight savings time yet until like the 27th or 29th of this month, which right now it is the 23rd. So for now, London still is opening at 4 until later the end of the month, and it'll start opening around 3 a.m. So this indicator is pretty accurate, as a lot of you guys know. But what I've been messing around with a little bit, which I might fund a small account with to practice more for like a month and see what my results are, is 1 minute scalps. I'm still going to do my main strategy where I go top-down analysis with full 1% positions and swing trading a little bit. But this one's for those guys that want to scalp a little bit. I would not recommend risking 1%. I would only do 0.5% or 0.25%. Or even having like a set fixed lot size for like a 5 pip stop loss, because you shouldn't really get 5 pip stop losses on this time frame with this indicator. So basically we're just going to go through and take every 1 minute trade. I'm going to say at 0.5% risk for now, and we're basically going to take every supply demand zone that's pretty much going with trend, and then you're going to have a, so for this example, I'm not 100% sure what happened. So this one's already evenly traded, so I'm not going to worry about this. Technically, it hasn't filled all the way, but I'm going to consider this one not traded yet. So I'm just going to place a limit right above this, right above here for 2 pips. 0.5%, that's a lot. That's a big lot size. And then for now, I'm going to do a minimum of a 1 to 3, but I'm going to go to the low. So right here at 0.5% risk is to be 2% so far. So it's starting to pull back a little bit. So far this is our low for 4.5. So right here. And then we're just going to keep testing this to give you guys a different perspective if you want to practice this or not. I'm not sure exactly the rest of the market structure, but we'll see what happens. So I trade London, so I'm pretty much just going to do London session here. So if we play this forward a little bit, got tapped into. Alright, so we can move this over. Then play a little bit. Oh wow. Pull back a little. So we got TP secured. So right here, where's my text box? There it is. Right here. So we'll just say 2.25% secured so far. Because that'd be 4.5, unless you wanted to make it 5%, but we're just gonna leave it for that. Alright, so 1 down, next trade, still with trend. We'll just say another 0.5% risk here. We'll do 2 pips to the low, which would be about 5R. So let's play this forward a little bit. Alright, I got triggered. Alright, let's see if this plays out. Came up, mitigated pretty much the whole supply zone. All right. So in a case like this, I probably wouldn't take this just because I'm already in this trade. So I'm not gonna take this one just because I'm already in this one. I don't really like being in multiple. However, if there's a buy right here, I'd probably get in it just to hedge it, but we'll see what happens. All right, nice. So this one's secured. All right, so 5R, so that'd be 2.5. Let's see, 2.5. All right, let's keep going. So I'm only basically trading trend.
Hey guys, my name is Elliot and my channel's called Trade Without.